Hey guys, today we'll discuss chapter 8 for personal finance class. This is using Focus in Finance, Focus on Personal Finance, using the book by McGraw-Hill, copyright 2022, by Kapoor, by Hughes, Hart, 7 editions. Let's dive in. There's about 5 learning objectives for this particular chapter. Number 1, identify the type of risk and risk management methods and develop a risk management plan. Number 2, assess the insurance coverage and policy types available to homeowners and renters. Number 3, analyze the factors that influence the amount of the coverage and cost of home insurance. Number 4, identify the important types of automobile insurance coverage. Number 5, evaluate factors that affect the cost of automobile insurance. So I know this industry very well because I used to work for a number of insurance company. For the first one is Royal Sun Alliance, and then the second one is Travels Canada, and the third one is Intech. So it's almost 10 years already in Canada, insurance industry experience. Insurance and risk management. Let's start objective 1. All right, let me just make sure, guys. Charles Beatfield, can you please make sure you mute? Do not disturb this on the purpose. Okay, Charles Beer, already I told you at the very beginning. All right, let's start with the insurance and risk management. Okay, the first one is insurance is a protection against possible financial loss, and insurance company insurer is a risk-sharing firm that assume financial responsibility for losses that may result from an insurance. A person joins the risk-sharing group by purchasing a contract known as a policy. So if you buy a insurance, you call it a policy. A purchase of policy is called policy holder, and they pay an insurance company called a premium or fee. Protection provided by terms of insurance policy is known as a coverage. Okay. All right, guys. Let me ask you. Mention this many times. While I'm doing a lecture, please mute your call. You can answer questions later. Okay. Protection insured by term insurance policy is a coverage, and people protected by policy are called insured. The type of risk. Risk is the chance of loss or injury. Insurers often refer to the insured property or a person as a risk. Peril is anything that may possibly cause a loss. A policy protects against a wide range of peril, including fire, windstorm, explosion, and robbery and accidents. Hazard is anything that increases the likelihood of loss to some peril. The example will be defective house wiring is a hazard that increases the chance that wire will start. Type of risk. Most common type of risk, there are in terms of property risk and liability risk. Personal risk. What is personal risk? Involves a loss of income, of life due to illness, disability, old age, and unemployment. This is your personal risk. If you got sick, have disabled, or old age, you got or unemployed, getting laid off. Okay. Property risks include loss to property caused by perils such as fire or theft and hazard. And then liability risk, which involve liabilities involved caused by negligence that leads to injury or property damage. Negligence will be a failure to take ordinary or reasonable care to prevent accident from happening. Personal risk, property risk, and liability risk are the types of pure uninsurable risk. So this is, you can insure this risk. Personal risk, property risk, liability risk. So any insurance company will take it. But speculative risk carries a chance of either loss or gain, is not insurable risk. Okay? Sometimes you're gambling. An example is gambling. You cannot insure your gambling habits there. Risk management methods. The risk management is an organized plan for protecting yourself, your family, and your property. Risk avoidance involves anything risk altogether. Example, avoid risk of traffic accident by not driving to work. Okay? Risk avoidance is a good example. Instead of driving, you can take the public transport. Risk reductions decrease the likelihood of risk that will cause a harm to you. Example, wearing seatbelt or installing fire extinguishers. Okay? Risk assumptions means taking on responsibility for the negative result of a risk. Example, not purchasing collision insurance of an older car. Risk shifting is involves transferring risk to an insurance. Deductible is a set of amount the policyholder must pay for loss of insurance policy. Deductibles, for example, you're in an accident, cost of damage is $1 million, example, but you have a deductible of 500, so you have to pay $500 for your deductible, okay? Or you have a deductible of 1,000, you have to pay 1,000. Risk and management strategy. Risk, there's personal events such as disability. What help will be impact? Loss of income, increased expenses. Illness, the same thing. Loss of income, catastrophic hospital expenses. Every illness you go to a hospital, it's gonna cost a lot of money. Okay, if you are in the U.S., there's a problem there. U.S. does not have a universal health coverage, then you have to pay your medical expense. Remember, it's a lot. It's very expensive to live, to be sick there. Death will be final expenses. Retirement will be discrete income and unplanned living expenses. Property loss will be catastrophic storm damage to property, repair or replacement costs of theft. Liability will be claim and settlement costs, lawsuit and legal expenses, loss of personal asset and income. So how are the strategy in reducing your financial impact? There's risk and management strategy here. For personal resources, you can use either saving and investment. Private sector, you will use disability insurance. Public also disability insurance. WSIB is a good example for public sector. Private sector, you can buy a disability insurance as well. Personal, you can saving and investment. Health enhancing behavior, there's a good activities. Do a lot of exercises. Health insurance, health maintenance organizations. Public sector, you will medical health care. Medicare and Medicaid in the US. In Canada, we OHIP. Aspect planning risk reductions for life insurance. Life insurance for private sector. For public sector will be Social Security Advisor, survival benefits, and fraternal life insurance. For personal resource again, saving, investment, hobby skill, use a retirement or pension. And for public sector, you use Social Security Pension Fund. Or for government employees. Here, we're going to use also the retirement fund, which is RRSP. This is RRSP is more private. We will always all age benefits, okay, and retirement benefits. You have that. Let me just go back. Make sure we are covered. All right, let's go back again to page 10. Planning for insurance program. Number one, you need to set an insurance goal, reduce the possible loss of income caused by premature death, illness, and accident or unemployment. Reduce the possible loss of property caused by perils such as fire, theft, and hazard. And reduce possible loss of income, saving, and property because of your personal negligence. In developing insurance program, number two, you develop a plan to reach your goal. What do I need to insure? Home, that's for sure. Property, home, and then in a car, that's for sure, and then health, that's for sure. How much would you need to insure it? What kind of insurance you need to buy? Who you should buy the insurance from? For here, if you are an international student, you need to buy health insurance using Canadian Shield or any other insurance company that will provide your coverage. And then number three, put your plan into actions. And then number four, check your result. Insurance needs and goals change, so take time to review your plan frequently. Remember that you need to check this is number four, okay? Not number two. So this is your thing. Exhibition, number one, set insurance goal, develop plan, put your plan actions, and then check your result. This is the cycle and the process. Property and liability insurance in your financial plan. There's major natural disaster have caused catastrophic amounts of property loss in the US and other parts in the world. 2017, Hurricanes Karma, Irma, Jose, and Maria caused 100 billion property damage. 2019, Tropical Nestor and Hurricane Dorian caused about $22 billion. Recently now in Milton, Hurricane Milton to Florida caused over $20 billion of damages. Okay, just recently here, in October, in Florida. Two main types of risks that relate to your home and your car and other vehicle, such as risk of damage to a loss of your property. Number two will be your responsibility for injuries of other people or damage to their property. Property owner face two basic types of risks. Number one, there's a physical damage, such as fire, wind, water, and smoke. Number one. Number two, loss of damage because of criminal behavior such as robbery, burglary, vandalism, and arson. This is the one that's the most common one. If you live in Brampton, that area, or maybe Jane and Finch, there's a high crime rate there in certain area. That is called because of the vandalism or robbery or burglary. So I'm quite lucky. I've been living in the city of Burlington. There's less crime in this part of the world. Liability is a legal responsibility for financial costs of another person's loss or injuries. You can be held legally responsible even if the injury or damage was not your fault. Often, if you're found liable, it's because negligence on your part caused the mishap. Okay, look at the number 2 now. Home and property insurance. Okay, home and property insurance, this is a must for you. You have owned a property. It's a coverage, a place of residence, and its financial risk such as damage of personal property and injury to others. Renter's insurance include coverage for personal property, living expenses, as well as personal liability and related coverage. Okay, does not provide coverage of building and structure. This is for renters, only cover for your living expenses. There's 2 standard rental insurance policy. Broad form, covering your personal property against peril such as fire and theft. In comprehensive form, protects your personal property against all peril not specifically included in the policy. Basically, it's covered if you are renting a house, that you need to have that. Okay, rental insurance policy. All right, let's move on. Rental insurance. When shopping rental insurance, beware of this policy. In order to pay only the actual value of your losses, fully cover your personal property only at home, and Auto provides liability coverage if someone is injured on your premise and may duplicate other coverages. Most important way, the rental insurance is the protection it provides for your personal property. Okay, for the home insurance coverage provides coverage for the following: the building in which you live and another structure of the property, and additional living expenses. Personal property, example, personal liability, coverage, and specialized coverage. This is the building itself. This is your personal, such as your TV. And if there's a damage of your place, then you can use a hotel or motel to live there. And then you also have personal liability and related coverage for the slip and fall. Homeowner insurance power coverage, building and other structure and additional living expenses. For building and other structures, the main purpose of homeowner insurance is to protect you against any financial loss in case your home is damaged or destroyed. This said structure on your property, such as garage or toolness, also shared covered. Additional living expense, pay for you to stay somewhere else. Example, in a motel apartment, if your home is damaged by fire or some other event. Some policy limit expense up to 10 to 20% of the home compensation or the limit payment to maximum 6 to 9 months. So it only covers you to maximum about 9 months, okay? Cannot be more than that. Usually, if you want, you have to add additional coverage. There is a personal property as well. Home insurance coverage for personal property covers your household belongings, such as furniture, appliances, and clothing, up to portion of the insured. Usually between 55, 70, or 75%. The typical limits for the payout or the theft of certain items provide protections against the loss or damage of article that you take with you when you are away from home. The household inventories are a list of other documentation of personal belongings with the purchase date and cost of the information. The personal property photos cover damage or loss of a specific item of high value. This is the inventory cost. This is a typical diagram of your household items. Okay? And then protects you and the members of family if others sue you for other injuries that suffer in terms of damage to your other property, such as cost of legal defense. The basic personal liability covers up to $100,000 in most homeowners policy. The umbrella policy also supplements the personal liability coverages. Medical payment coverage pay the cost of minor accident injury to visitor on your property. Generally $5,000 in terms of coverage. Home insurance policy form. There's basic form H01, which protects against perils such as fire, lightning, windstorm, hail, volcanic eruption, explosion, smoke, theft, vandalism, glass breakage, and riots. Board Form 2 offers a wide coverage weather coverage, including falling objects and damages from ice, snow, and sleet. And then there's a special form which cover all basics broad form risks plus any other risks unless specified excluded. The common exclusions are earthquake, flood, war, and nuclear accident. If there's a flood, usually there's an exclusion. Or if there's a war, there's another issue. Now, tenant form, which is cover the personal property, renters again listed risks. The compensation form HO5 expand the coverage of the HO3. The condominium owner insurance HO6 protects personal property and addition or improvement made to the living unit. Okay, home insurance policy usually cover items such as credit card fraud, check forgery, temporary repairs, and cost of removing damaged property, and the emergency default of the property, and fire department charges. Okay, remember guys, there's always a fire department charges if you call in the 911. Okay, home insurance cost factors. Objective number 3. Coverage amount should be based on the amount of money that you need to rebuild or repair your house. That's what we call it, the ACV, which is actual cost value method. What is it? It is insured based on the current replacement cost or damage or lost item less depreciation. So basically, your house is $1 million, but to rebuild costs you about $800,000. They're gonna pay you up to $100,000. Replacement value cost pays insured the full cost of repairing or replacing damage of lost items. So there's two ways of calculating replacement value of the home or actual cash value. It values the contents. Okay, these are the chart showing it. Factors that affect the home insurance cost: location of the home, such as lower rates if the home is near a water supply or fire hydrant, or located in the area with a good fire hydrant. Like my home is exactly in front of the fire hydrant, so it has a lower rate. High rates is usually for high crime areas and the expensive areas such as tornado and hurricanes. For example, Florida is a good example. The insurance cost there is very, very high because of every year they have tornadoes, hurricanes. Another good example will be like Brampton. I like to pick up Brampton because the city has the highest number of accident rate and the highest crime rate at the moment per capita. That's why the house there and the car insurance rate are very expensive, the highest in the Ontario. All right, coverage, type of structure, big home, cost like to insure, and those are made of wood is different as well. The brick home is usually cost less. Okay, wood is easily to catch fire if there's any fire. And the coverage amount and policy type, deductible also affect the cost of insurance. The home insurance discount, if you have an alarm, smoke detector, fire extinguisher, you're going to get discount there. Company differences, compare cost and coverage and service as well. Okay. Okay, now after we do property, we're going to focus on the auto insurance because this is going to affect us on daily basis. What is auto insurance? If you are driving in Canada, Ontario, in US, you are required to have an automobile insurance. If not, you're going to get fined up to $5,000 and you're going to lose your license. What is financial assistance law? Requires driver to prove their ability to cover the cost of damage or injury caused by an automobile accident. Every state in the US has a financial responsibility law. So again, guys, US, Canada, you must have an auto insurance. If you do not, you're in trouble. Coverage provided by motor insurance policy fall into two categories: protection of body injury and property damage. The body injury coverage will be by injury liability, medical payment, and uninsured motorist protections. PD damage include property damage liability, collision, and comprehensive physical damage. What are they? Body injury cover the financial loss due to legal expense, medical expense, lost wages associated with injury caused by an accident which the insured was responsible for. If you hit from the back to somebody else, then you are responsible. Coverage can be expressed in three numbers: 100 to 150. 100 maximum paid for injuries to one person, 300,000 maximum paid to all injured parties, two or more, or 50,000 paid to the property damage to others. Medical payment coverage is automobile insurance covers medical expense for people injured in the insured car. For the uninsured motorist, protections cover you and your family members if you are involved in an accident with uninsured hit and run driver. So this is for the uninsured motorist. If you are hit by uninsured driver, then you are covered by this one. Example here, 130, 150. This is the logic of the coverage. 100 limit that will be paid for 1% accident. 300,000 limit will be paid to all person in an accident, and 50,000 limit for payment damage to property of others. What are the next one? Let's continue. Property damage liability, protecting a person against financial loss that the person damaged to the property of others. Also protects you when you're driving another person's vehicle with the owner's permissions. Coverage extends to building and equipment such as street, sign, and telephone poles. Collision insurance pays for damages to the insured vehicle when it is involved in an accident. Comprehensive physical damage coverage protects you if your vehicle is damaged in a known situations. Protect your vehicle against fire, theft, vandalism, flood, and etc. The no-fault system, Ontario is a no-fault system. Driver involved in accident collect medical expenses, lost wages, and rare injury from their own insured company. It does not matter who caused the accident, each company pays the insured up to the limit of his or her coverage. No-fault system is varied by state. Other types of motor insurance available, such as wage loss insurance, towing and emergency road service coverage, and rental reimbursement coverage. So you are in an accident, you have to make sure you have a towing as well as rental reimbursement coverage. Remember, it's very expensive to have a towing car. It costs you maybe $800. Rental is the same story. Okay? When I look at the next, objective number 5. Insurance cost average spend about $1,200 for motor insurance yearly. This is cheap, I think. In Burlington used to be $1,500 a year. Now it's about $2,000. I pay about $2,000 a year car insurance. But if you live in Brampton, average cost is going to be about $4,500 to $8,000 a year. Depends on where you are. Okay, which cities depends on again. If you live in the city with the highest number of accidents, the highest number of theft, then you're going to be charged overall because of your zip code. Okay, you need to have enough coverage to protect yourself legally and financially. Legal concern: most people cannot afford to pay an expensive court settlement with their own money, so liability insurance must be purchased. 100/300 is usually recommended. Okay, remember the formula in the previous slide. That's basically what it is. Property values. Cost of vehicle has increased, so property damage liability limit up to $50,000 to $100,000 should be considered. So vehicle type. Also, the type of that can cost the insurance premium. The year, make, model, type are affected insurance. For example, if you drive Ferrari, it's going to cost more. If you drive Lamborghini, it's going to cost more. Or rating territories, rural areas, have fewer accident and less frequent occurrence as theft and really lower. If you live in the country, like maybe North Bay or Thunder Bay, it's going to be cheaper. Driver classification is the same story. Age, sex, marital status, driving record. If you are driving a young driver under 25 and elderly driver over 70, you're going to cost more accident mostly. So they are high risk driver, so it's going to cost more. Cost of number of claim also affect premiums. Okay, I mentioned this to you. You live in the city of Brampton, that's most likely you're going to have high premium. Assigned risk pool consists of people unable to obtain insurance due to poor driving or accident record must obtain coverage at high rates through a state program. We call it, in Canada we have it, we call it facility association. High risk driver put together into one lump sum, they call it facility association. And the premium they charge minimum is $5,000 a year. That's too much. Maybe your car only worth $2,000, $3,000, but your premium is $5,000. That doesn't make sense for me. All right, so be careful with your driving car. Okay, compare companies. You need to raise and do a service comparison. If the insurance company in the same area, you need also to compare service with your local insurance agent. Premium discount. Establish and maintain a good driving record. Non-smoking. Install security device. If you have more than one vehicle, make sure you insure the same company because you get multiple discount. Considering also increase your deductible from $500 maybe $1,000 and choose your car carefully. Maintain a good credit record. Okay. The key point in choose your car carefully. There's news recently. There's had the highest number break-in, mostly for in Toronto here area, GTA Toronto area. It's Lexus. Lexus is one of the most favorite target to be stolen. by theft and basically high-end cars. Because why? They like to take that car and ship it somewhere in the third world countries. Okay, this is chapter summary. Basically, identify the type of risk and risk management and the whole risk management. The type of risk we have mentioned: personal risk, property risk, and liabilities. This is the overall summary that we have discussed. And we can do by doing avoidance, reduction, assumption, and shifting. Chapter number 2, summary. There's a, we call it rental insurance, which provide same kind of protection as homeowners policy, but it's only for renters. If you are renting a house, renting an apartment, then you need to have rental insurance. While homeowners policy provide coverage for the building, living expense, and liabilities, and any other coverage. For object number 3, in chapter summary, we have the fact that home insurance coverage and costs include the following: location, structure, coverage amount, policy type, discount, and choice of insurance company. Again, I mentioned this to you. Location is the key. Previously in many slides. Okay. Different city has different one. Burlington, much cheaper. Oakville, much cheaper. If you live in Toronto, it's much higher. You live in Brampton, it's much higher. Or Mississauga. Number 4, motor vehicle body injury coverage include all the body injury liability, medical coverage, as well as uninsured motorist protection. Motor vehicle damage coverage include the following: property damage liability, collision, and comprehensive physical damage. So that's basically for number 4. For 5, evaluate the factors that affect the cost of the automobile, which is depend on the amount of coverage, vehicle type, rating status, and driver classification. M1, M2, and full M. It's all have different class and different risk premium. So that's basically conclude this chapter, guys. So I'm going to upload this in YouTube as well as in Edpuzzle for your interactive learning. Thank you. Bye-bye.